Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at two stocks whose prices are down lately, and analysts say it might be the time to buy. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are looking at two different stocks that are trading at rock bottom prices and analysts say buy. And yes, I know the article says three, but I'm only focusing on two of the companies. As always, the link is going to be down in the description if you want to see the third. So in today's video, we're going to take a look at those two companies, what they do, and what analysts are predicting for their future. And just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that like button and leave your thoughts in the comments down below. Also, don't forget to check out some of the links in our description, which includes a link to our Patreon page, which gets you access to our Discord chat group, and this is proof that my dog is alive. Anyways, on to the first company today, and that is Intercept Pharmaceuticals. They trade under the ticker ICPT and are currently at $30.35 per share. Now, they are down from highs above $115 back from last January. Now, Intercept Pharma focuses on creating treatments for some of the most dangerous chronic liver conditions. These include NASH, or non-alcoholic steatohepatitis, which is a chronic progressive liver disease that occurs when excessive amounts of fat build up in the liver, damaging hepatocytes. NASH is driven by inflammation, which results in fibrosis. And also PBC, or primary biliary cholangitis, which is a rare liver disease that is caused by an autoimmune reaction. The autoimmune reaction damages bile ducts in the liver, and when bile is not able to move through the ducts, it collects in the liver and causes damage. And PBC is progressive, which means that the damage gets worse over time. Intercept has a research pipeline based on FXR, or farnesoid X receptor, which is a regulator of bile acid pathways in the hepatic system. Treating liver disease through the FXR biology has direct applications for PBC, and the company does currently have a drug on the market, Ocaliva, which has been out since 2016 for treating PBC. FXR biology is also showing promise in treating complications from NASH and has completed phase 3 trials. But shares of Intercept did drop sharply last summer when the FDA rejected their application for approval for treatment of these NASH-related conditions. This delayed the drug's potential entry into a lucrative market as there's no current treatment for NASH, and the first drug to win approval will have the lead in reaching a market estimated at $2 to $5 billion in potential annual sales. So the effect on the stock is still felt. In reaction, in December of 2020, Intercept announced major changes in their top-level management as CEO and President Mark Pruzanski announced he's stepping down effective January 1st of this year. He is succeeded by Jerome Durso, formerly the company's COO. Now, despite this setback with their NASH treatment, they are seeing success on the PBC side, as their PBC business reported the strongest quarter to date, with net sales of $79.5 million, representing a 29% growth over the prior year quarter. Their full year 2020 guidance narrows, supporting strong financial foundation, and their net sales are now anticipated to be between $310 to $320 million. In regards to their setback with their NASH treatment, they say that there was constructive Type A end-of-review meetings with the FDA, and additional work is underway based on that feedback. Piper Sandler analyst Razmeen Rahimi takes a deep dive into Intercept's continuing efforts to expand applications of OCA and to resubmit its new drug application to the FDA. She sees the leadership transition as part of these efforts and writes, "We believe that Dr. Pruzanski's dedication to transform the liver space is still strong, and that he will continue to guide ICPT's progress as an advisor and board member. Additionally, we've had the pleasure of working closely with Jerry Durso and believe that he will transform the company and lead ICPT's success in growing the PBC market and the path to potential approval and commercial launch of OCA in NASH." So Rahimi rates the stock a buy, and with an $82 price target, which would be about 220% potential growth over the next 12 months. There are 18 analysts with current ratings on this stock, and the reviews are coming in a bit mixed. So it comes in as a moderate buy with 8 buy ratings and 10 holds. Now the average price target is $58, which is still a very nice 91% potential upside. The most recent review came in yesterday with a hold rating at $40 per share, which is still a 31% upside. On the highest end, we have a Webull rating for $116, which would be a 280% potential upside. So a decent spread of expectations on the Intercept stock. Now the second company that we're looking at is Esperion Therapeutics. They trade under the ticker ESPR and are currently at $29.50 per share, which is down from highs above $70 back in January. Esperion specializes in therapies for the treatment of elevated low-density lipoprotein cholesterol levels, which are a major factor contributing to heart disease. They believe changing the world requires focus to discover, develop, and commercialize oral, once-daily, non-statin medicines for battling bad cholesterol, and that people should be able to afford and access their medicines. Esperion has a proven 20-year history of delivering innovation towards this singular mission, and they are the only publicly held company with a singular focus on fighting bad cholesterol. Approximately 97 million people in the United States have high levels of bad cholesterol, and 8.7 million patients in the US are taking statins but need additional therapies to reach their LDL-C goals. Now, elevated cholesterol is an established risk factor for cardiovascular disease, and the number one cause of death globally is cardiovascular disease, and there's significantly less innovation versus any other therapy areas. Now, this causes more annual deaths than all forms of cancers combined. So the company competes against pain points, as most innovation in their therapy area is delivered by injection, but 4 out of 5 patients would prefer a pill. And luckily, back in February of 2020, both Nexletol and Nexlizet were approved as oral treatments to lower LDL-C and have been available since March of 2020 and July 2020. Bempedoic acid remains in clinical trials of its efficacy and risk reduction for cardiovascular disease, and the trial, which is called Clear Outcomes, is a large-scale, long-term study tracking more than 14,000 patients with top-line data expected in the second half of 2020. The study covers over 1,400 locations in 32 countries around the world. Now, Esperion shares peaked back in February after the FDA approval, but have been on a steady decline since. And they also saw a fall in revenue from Q2 to Q3. Then since the Q3 report, they announced pricing on a $250 million offer of senior subordinated notes. The offering gives the company a boost in available capital for further work on its development pipeline and its marketing efforts for bempedoic acid. Chad Messer is an analyst covering the stock for Needham, and he sees the note offering as a net positive for Esperion. He says that we believe this cash position will be sufficient to support Esperion through 2021 and to profitability in 2022. We believe this financing should help put to rest concerns regarding Esperion's balance sheet. Despite a challenging launch for Nexletol and Nexlizet, product growth has continued in the third quarter against the backdrop of a contracting LDL-C market. This growth trajectory suggests potential for a rapid acceleration when conditions improve. He rates the Esperion stock a strong buy, and his massive price target of $158 per share would represent over 480% potential growth in the next year. And there are 5 other analysts with current ratings on the stock. And it comes in as a strong buy, with 5 buy ratings and 1 holds. Now, they aren't quite as optimistic as Messer, as the average price target is $63.33 per share, but that is still a nice 114% potential upside. Besides Messer, the most recent price targets are around the $40 to $50 price point, representing between a 35 to 70% potential growth. So some interesting outlooks on those 2 companies. Now, of course, these are both bio and pharma related, and that always comes with a lot of risk, as a lot of their success hinges on those certain FDA approvals. So always approach these companies with caution. Now, I always love hearing from you guys, so make sure to leave your thoughts down below in the comments. What do you think of these 2 companies, and what other stocks that have hit some bottoms here do you think are bound to recover? Keep in mind that these videos are never a suggestion to buy or sell any specific stock. They are just meant to bring new companies to your attention that you can then perform further research and due diligence on before making any investment decision. If you made it all the way to the end of today's video, make sure you give us a thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.